Hello everybody, this is Toni Turner and welcome to the market now as of about 2:30 Eastern on Friday, May the 11th. U.S. stocks are mixed so far today. Healthcare shares remain steady ahead after President Donald Trump's speech on curbing prescription drug costs and mainly spared the industry. Trump addressed the high prices set by drug makers, rising costs for consumers, and barriers to negotiating lower prices for seniors in the government's Medicare program. And on that note, we'll go forward and look at three stocks that could give us some insight into the week to come. Now, first of all, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock for the S&P 500 index. It's the ETF. Now, as we know, the SPY made an all-time closing high of $286.58 this year on January 26th, and since then we've had quite a volatile roller coaster ride. The SPY has dropped twice to its 200-day moving average, the black line on this screen, actually 3 times. Since February, the one time here, then it dropped again, in March, and then it dropped again in May. And the 200-day moving average, though, has been moving higher. So the fact that each time these lows were slightly higher was kind of a help. So we built a triangle here. Then, as you probably know, the SPY kept making more of a triangle formation, and we can even put another channel line down over the top here. Now, most market participants were pretty happy in the last 3 days when the SPY closed above the 50-day moving average. That's the green line here. The 20-day is the red line. When the SPY closed above the green line and broke this one triangle setting, moved up over this this prior high here, up about to 71, and the SPY broke up and above this channel line that was coming in here. So it looks like maybe, just maybe, the last week's price action has broken us out of this triangle that was getting pretty worrisome here toward the end. As we see, the 20-day moving average is rising up toward the 50-day now. That's good. That will be good if it crosses, or positive if it crosses above that. Now, we do have a spinning top, candlestick technology. We do have a spinning top today so far, a very quiet, narrow range candle. And the SPY right now is trading at $272.34. So we could be in, if this spinning top creates a little mini high here, we could be in for a little profit taking in the coming week. Maybe, maybe not. We'll have to see. It would be great if the SPY just continues up. However long it takes, it moves back up to this 280 or 2800 part of the SPY. It'd be great if it could move back up to 286. Where it was before, but that we will have to see. Just staying positive in this week and breaking out of that triangle formation was certainly a good technical advance. So let's keep an eye on the SPY, see if it can stay above this green line, which is coming in, the 50-day moving average, which is coming in at 267.37 right now. That would be very promising if it could at least stay above that, I should say, in the coming week. And in the coming week, we have a lot of retailers who are announcing earnings, but we're getting through the major part of earnings season. Now let's go on to our second chart today. This is the iShares Russell 2000 ETF, the IWM. I've told you about this before. This particular ETF follows the Russell 2000 small cap index. Now the small caps again are valued at about 300 million to 2 billion each. And this particular ETF or index has a habit of acting as kind of a leading indicator for the broader market. So that's why we keep an eye on it. Now, it made an all-time closing high on January 23rd at 159.96. Since then, like the SPY, but even more so, the IWM has turned into one very volatile roller coaster. And we took quite a ride on it, making these all-time highs, then fell like a stone down to the 200-day moving average, dove below it managed to always close above it every day, ramp back up to mid-March, almost back up to its one, and I'm going to call it, it's 159.96, so I'm going to call it 160 here for simplicity's sake. Rose almost all the way back up to that 160 high, not quite, fell back down to the 200-day moving average. Woohoo! But a higher low, we got to get at that, a higher low, then moved back up, fell back down, and now today, and actually Thursday yesterday, the IWM moved back up and touched $160 again. So now we see, and of course it's up above the 50-day moving average and the 20-day, right now trading at 159.45. So this is the moment of truth here. Can the IWM in the coming week break out of this 160 level and break out and above it? If we can, that's going to be a very positive sign for the entire market, if the IWM can do that. If it can't, if it needs a little breather here, we've got another spinning top today so far, kind of tired out here after this big run it's made in the last few days. If it needs to move back, I'd like to see the IWM stay above the 50-day moving average, which is now coming in at 154.85. I'd like to keep it at least that positive and stay in this range above 154 as we head more into May. If it can do that, that will be fantastic and certainly positive for the market. But it has to have a little pullback here, a little profit taking down toward 158, 157. We'll understand, but it'd be great at some point in the next couple of weeks if it can get a running start and move up and break above 160. That will be very positive for the market. Now we'll look at an ETF we haven't looked at in quite a while. This is the Global X Social Media ETF. Probably has some of your favorite holdings in it. The top holdings are Twitter, Facebook, Tencent Holdings, Baidu, and Alphabet. The symbol here for the Global X Social Media ETF is SOCL. That makes sense. Now it made an all-time high in March, on March 13th, of $39.03. Since then, and partially on the back of Facebook's problems earlier in March, and partially just on the market pulling back here, the SOCL fell down to a low here. It gapped down to this low this one morning of $32.50, $32.50 on April 4th. Now that equals about a 15%. This whole drop here equals about a 15% drop in the social media ETF. Now since then, it's been wandering around on its 200-day moving average, kind of scooching sideways here, dropping last week. 3 times it dropped below this 200-day line, but actually, like the rest of the market, coming back this past week. We could almost call this, not quite, but almost call it a bottom fishing play. So what I'm going to be doing today, when I captured this chart, the SOCL was trading at $34.54. We do have the 50-day moving average coming down overhead at 35.16. What I might do, and there's a couple of ways to play this, if the SOCL next week can break out over these highs at about 34.60, if it can break out, I may wait a little and I may not. I may, if it starts to break out and the market's positive, I may put on a very small share position and then see if it can jump up over the 50-day moving average and close above it. If it can do that for a couple of days, then if I have a position, I will add more shares. If I get in when it's still under the 50-day, it'll be very small share size. It'll be a little tiny bit of a gamble here. Now, my initial protective stop on this play will be a close below the 200-day moving average, which is now coming in at 33.49. So that would be my initial protective stop that I would turn into a trailing stop if the SOCL breaks to the upside over the 50-day moving average. So if it can break out, good. I'll just step in very, very slowly and add to my position if it turns out to be a successful trade. But it may be, if the market can continue higher here and the QQQ or text can continue higher. It's just possible, excuse me, that the social media ETF will also start climbing back up toward $36, $37 point. Now, this is not a day trading stock. It does not have the volume for that, or I should say ETF. It doesn't have the volume for day trading. Okay, and now on to the coming week's economic reports. But first, I want to alert you to an exciting opportunity. We have just released my brand new online training, How to Swing Trade Successfully. In this program, you will discover the Sleeping Tiger setup and exactly how to use it to make high potential, high profit swing trades. Now, the Sleeping Tiger setup is a setup that I use for my own trades, and it is the setup that we use and have used for the past 9 years in Toni's Market Club. This strategy is easy to learn, and you'll discover how to take the biggest profits out of, and it's for long trades only, out of long upswings safely and successfully. So don't miss out. Check out how to swing trade successfully at the link on your screen and just down under the screen where you see it. And you will get this brand new online program at the 20% discount, introductory discount, I should say, right now. And this discount is only going to be good for a few more days. Only good for a few more days. And now for the next week's economic reports. Again, remember, we're still in earnings season. On Monday, for economic reports, we don't have anything of note. On Tuesday, we have the Empire Manufacturing Index and retail sales. On Wednesday, we have housing starts, building permits, and our usual crude inventories. On Thursday, we have jobless claims, the usual jobless claims, Philly Fed, and our natural gas inventories. Not much going on Friday. Again, don't miss out on our limited time offer to grab our brand new How to Swing Trade Successfully program for 20% off. Please click on the link below for more information. Until next time, keep green on your screen. I'm Toni Turner, and this